All right, it's looking good. Thanks again, everyone, for joining us. First webinar of the year, 2020, so welcome back. And we're going to kick off with the Small Business Risk Review. I think it was probably marketed as the Q4 review, but we've done quite a bit of work with our data over the last month to incorporate a bit of a 2018-2019 comparison as well. So we'll have a look at a little bit of the information in there. As I said, welcome back. Before I get started, where can I ask questions? Will I get a recording and today's presentation? You can ask questions in the GoToWebinar control panel. Please do that. We will try to answer them at the end. If not, we will get back to you within the next sort of day or two. Will I get a recording in today's presentation? Yes and yes. We do record all of our presentations and send out the slides as well. So that will come through in the coming 24 hours or so as well. A little bit about CreditorWatch. Got some new photos here from the last sort of 12 months as well. We're Australia's leading and most innovative commercial credit reporting bureau with over 50,000 customers and growing. Main product suite there, obviously CreditorWatch, our core product. Data Logic is our trade program. Director Due Diligence looks at the people behind a business and also gives you the ability to receive adverse cross-directorship alerts on the directors themselves. So if they've got other companies that are failing, you will receive email alerts. Very clever. Apply Easy is our online credit application, and PPSR Logic, our fairly newest product that we released a bit over 12 months ago now. Everything to do with PPSR, registrations, management, renewals, etc., bulk uploads. So what is the Small Business Risk Review? It is a quarterly analysis of aggregated data and trade payment information. So essentially what we're doing is we're taking as much information that comes into our bureau as possible, aggregating it and trying to find interesting insights and stats to share with you outside of that. So you can see there a range of public and private data sources that we have curated over the years, including ASIC, AFSA, which manages the bankruptcy database, courts, insolvency notices, debt collection notices, and of course, plenty of information that comes through from our customers, which is of course very unique to CreditorWatch. So a quick poll question as we kick off. How do you feel about the trading conditions for 2020? Let me get this loaded. Launch poll. Positive, neutral, negative. I will have a look at those results, then I'll share my own thoughts as well, based off people that we speak to from a customer point of view, my interactions with government, but also what we're seeing in the data itself. Really interesting mix coming through. I can obviously see the live results, so we're almost there, almost got everyone voted. If you haven't voted, get it in. I'll give you another couple of seconds. Okay, here we go. Still people voting, which is nice. All right, it's not changing much. Let's share the results here. So quite a mixture. Yeah, 27% positive, 44% neutral, 29% negative, almost, pretty well balanced there, to be honest, which is quite interesting. I certainly expected it to be more on the negative neutral side, or more towards the negative, I guess. Certainly what we're hearing from people in the market is, a lot of people were treading water through the New South Wales election, which was over 12 months ago. Federal election, which is, we're sort of coming up sort of 12 months, I think in March, I believe it will be. And then, not much really happened for quite a period of time leading up to those. And then afterwards, we started to see some sort of negative numbers coming through in our small business risk reviews. For those of you that joined us for previous ones, from a data perspective, you'll see here the numbers certainly don't support a positive outlook. I don't like being negative, but if we're just looking at pure numbers, certainly doesn't look good. It didn't look good last small business risk review. It doesn't look good this time around. Again, we're not seeing an increase in insolvencies, which is obviously good if we can hold them off as long as possible, but all signs point to the fact that An increase in defaults leads to an increase in court actions, both of which we're seeing, and then thereafter you start to see insolvencies, and then the last sort of indicator is bankruptcy. So thank you for sharing your thoughts there, and I'd like to do that more often across our database, potentially make that part of our small business risk review on a quarterly basis. So let's have a look at defaults first. So 2018 versus 2019, year-on-year increase was 29%. Now we normalize that. So if you're looking at the numbers here and going, well, hold on, 18 to 14,000, 8,000 to 14,000 isn't quite 29%. It's much more than that. We normalize it. Creditwatch is obviously a fast-growing business, so we have to take into consideration the number of companies that are joining us and registering defaults as well. So 29% is our normalized number, which is still a fairly significant increase. If we look at the Q4 2018 versus 2019, we're seeing a 15% increase as well. So both heading in the wrong direction if you are a creditor out there. Industry-wise, still staying on defaults. The real problem industries that we saw 2018 to 2019, big increases in transport, healthcare, and also real estate services, 64, 79, and 61%. Respectively, and then looking at a quarter-on-quarter comparison, 2018 to 2019, risky industries, transport, postal, warehousing, rental, hire, and real estate, and then construction, which is the obvious one that always seems to have its name in the headlights from a negative point of view. And I think once a lot of these small and medium construction firms get back to work, this week and next month, we'll start to see probably an increase in defaults in that space, as well as construction continues to slow down. Payment times, just looking at Q4 2019, the slow paying industries, IT, media and telecommunications, financial services, construction, and then rental, hire, and real estate. Construction, rental, hire are very, very much aligned, 60 plus days. This is not terrible for those sort of industries, particularly those last two, but certainly it's a long time to wait to get paid, particularly depending on how you manage your own payments at your payables side of the business as well. Let's have a look at court actions across the major states and also Australia. So you can see some big ones that jump out here. New South Wales, 39% increase year on year, and then 60% increase quarter on quarter, which is huge. Victoria, which is a really interesting number, second biggest state, soon to be the biggest state by the looks of things. I think 2023, they're suggesting that they'll be the most populous state. Only 4% both in year on year and quarterly, which is really, I think I see that as quite a positive. A lot of the numbers that we look at are quite negative, but Victoria seems to be doing quite well, which is very important. Australia overall 9% increase year on year, and then 16% increase quarter on quarter. So I think we're starting to see the sort of back end of 2019 was certainly worse across the various insights and statistics data points that we look at, versus earlier in the year we sort of saw it ramp up and get worse throughout the year. Insolvencies, this is where I was mentioning earlier, we're certainly not seeing an increase. We're actually seeing a decrease, 14% decrease in insolvency. So this is looking at all insolvency notices that come through the Bureau. Administrations are showing similar numbers as well. ASIC are yet to release their Q4 numbers, but we've obviously got that live feed with ASIC, so we get a fairly good insight into what they're going to look like, and we're expecting it to be a decrease, which is obviously fantastic news. However, I think if you start to look at the latter end of 2019, it was certainly bigger than the latter end of 2018. And as I said, you have to have sort of payment defaults, increase in payment times, and court actions increasing. They that's all happening, and they are certainly the precursors, the canary in the coal mine, so to speak, for incoming, oncoming insolvency activity increasing. So when will that happen? I think we'll start to see it slowly drip over the next sort of, Feb, March, which is typically when everyone's back to work, taking stock of where they're at, either, from a their own business point of view, going, do I want to continue doing this, hard slog for another year, or should I put my company into administration, and then potentially try to look to get back into the workforce rather than living, hand to mouth, week to week, month to month. And then on the flip side, you have creditors, suppliers having a look at their payments. They know it slows down over that December-Jan period. Let's start having a look. Let's get on top of it. Okay, these companies are now 90 plus 120 days. We've got to consider, court action or winding up notifications, administrations, liquidation, that sort of thing. So I think March, April, May, we'll start to see an increase. I hope I'm wrong. I'm certainly more of a positive person than a negative person, but that is what the data is suggesting, and that's what I'm expecting to see. Industry-wise, from an insolvency point of view, no real bad standouts other than mining, which was interesting. Wholesale trade at 8%, and then what I really not liked, I guess liked is probably a good way to describe it, but I thought was a good one to pull out was agriculture, forest, and fishery industry actually went with 26% reduction in insolvencies, which is great. There's obviously a bit of an asterisk there, given the bushfire situation that started really, I think that was late October, early November. So we've had a full quarter of it, but we won't really see the ramifications of that for quite some time. If you compare it back to the Queensland floods, it did take time for that, for the forces to through businesses that had been affected. I know that a lot of creditors, suppliers, government agencies, etc., are being very good, very patient, very sympathetic. It just unfortunately does take time for the ramifications of what has happened to filter through, and eventually people realize that they cannot get their business up and running again, can't, won't, etc. So I think we will certainly see the stats in that ag industry turn around somewhat, and we've still got a biting drought across most of the country as well that will affect them. Looking at Q4 year on year, risky industries, mining, again, rental, hiring, we're seeing pop up, and information media and telecommunications. Particularly in that media space, we're seeing a lot of consolidation. We're seeing a lot of smaller operators either closing, selling, or going under. It's tough out there to compete with the Googles, Facebooks, 9 networks of their size when you're just a small fish up against those big behemoths. Bankruptcy stats, again, really good numbers here, positive. Year on year, we're seeing a 19% decrease, which is fantastic. I've got some stats here across the board. We're seeing drops across all states, and some fairly sizable ones as well, as you can see there in Queensland. So very, very positive here. Some important numbers that I sort of pulled out. National bankruptcies are at a 25-year low, which is unbelievable. It's a huge positive sign to see. We know that bankruptcies can be affected by businesses, and AFSA put out a stat last quarter, I think it was, showing that 25% of bankruptcies are business related. So you typically find a small business goes under. The directors or shareholders or workers within that are a family, and you see that they lose their income, or they go from 4 income streams to 1. Very difficult to maintain, and as a result you see bankruptcy. So that's an interesting stat there. Certainly want to be keeping an eye on the directors behind a business. And what to watch out for, I touched on it earlier, natural disasters. Not only do they affect companies, they also affect individuals as well, particularly those, you know, who are uninsured or underinsured. We have often seen a spike in bankruptcy. So keep an eye out for this. I think it'll be interesting to watch a lot of these stats over the next, you know, 6 to 12 months. So a fairly quick one today. I know everyone's just getting back into it. I know most people are probably, it's their first proper week back. One thing I did wanted to ask, as always, did you find the webinar useful? Be honest, yes, no, neutral. We're always trying to improve. If you do want to see something new, see something different, please share that with us. You can do that in the question and answer in the question spot within the control panel, or you can also just email us, and I've got some information coming up about how you contact us. Close that. Thank you for sharing. We've got plenty of webinars coming up over the next sort of 2 or 3 months. Jody and Natalie in our marketing team are working overtime for me to come up with great content, great ideas, great slideshows, presentations. So please do jump on there. You will get emails about it, but if you're ever interested, or if you're interested now to have a look, please do. It's a combination of new products, but also you know, information on demonstrations, how-tos, that sort of thing. Resource-wise, we're obviously going to send out the recording and the slides themselves, but any questions, please do get in contact with us. We'd love to hear from you. If you ever want to see something, you don't have to necessarily reach out on the phone. We've got email, we've got live chat on the website. There's plenty of opportunities for you to get in touch with us. Just having a look at some questions here. No real ones that I could answer straight off here. I think a couple of technical ones regarding GoToWebinar. We do have a question about, can we please have a session on division? Yeah, that is interesting. What I might do is maybe every quarter, each small business risk review, I might pull out a specific industry and focus on that. So thank you for that suggestion regarding food services. That might be a good one to start, because I know that that's certainly one of the riskier ones. Anyone that's providing goods and services to you know, retail, hospitality, bars, restaurants, that sort of thing is it's a tough industry to be in. So thank you, everyone. As I said, a quick one today to get back into it. I hope you get some good insights out of this. We will have some more information about Small Business Risk Review, the data, the insights, etc., going up on the website, on the blog. Hopefully you will also read about it in the media in the coming days and weeks. So thank you again.